It's widely acknowledged that traders and prices are influenced by emotions. These feelings, when measured, can be constructed into what's commonly referred to as a fear and greed index. This index is a powerful tool. It provides a clear and concise snapshot into the emotional state of the everyday trader. You and me, our job is to trade objectively, to avoid being driven by our emotions, and to avoid the crowd mentality. Sentiments around BTC, gold, and 30-year bonds don't have predictive elements, so we can breeze through those charts. Measurements are all up from last week and mostly have higher bullish sentiment. BTC's daily measurements did spike up to the greed zone, so it might be experiencing or be near a short-term top. The two charts we need to focus on are the Dixie and the S&P, not necessarily because they're important right now, but they could be in the future. The S&P this past week has rallied right up to the bottom of the greed zone, and the Dixie has fallen pretty close to the midline. These are key areas to watch for a reversal. The ideal scenario would be to watch the S&P continue to rise and the Dixie continue to fall. Then look for divergences to make those counter trades. I think we're at a place in the market where we may need to start being cautious with new longs and start looking for reasons to take profit on older ones. We don't want to get wrecked, so keeping a close eye on the general sentiment in the near future is probably important. If you do get lost in your emotions though, I did find a pretty neat place where Italians bury all their liquidated traders.